I'm sitting down today with Abdul, the founder of Forex Recipes. From May 4th to May 19th, just over 2 weeks, he's pulled $141,000 out of the gold market across 10 trades, 0 losses. We're going to look at every single one of those trades on screen, and I want to understand exactly how he does this. Abdul, thanks for joining me.
Thanks for having me. Appreciate it. The numbers speak for themselves, but what I'd really like to get into is the process. That's the part that actually matters.
Before we get into the trade summary, you didn't start with gold and you didn't start with ICT. Take me back. How long have you actually been trading and what came before this?
Like everybody else, I was looking for a way to make some extra income. To put a long story short, I started with stocks. I then looked at CFDs and I ended up in options. In fact, I went to the US and I bought a lot of courses from a company called Optionetics. I met up with the founder in the US, a guy called George Fortunalis. He's passed away now, and it took me years. Like, I was learning and practicing and trading for 10 years before it really clicked and before I started to make any money. It was very different back then because now we have a lot of resources available to us.
10 years is a long time to be searching for something that works. What was the moment it actually clicked?
When I was trading CFDs, I was doing a lot of technical analysis. I got into Elliott's Wave and moving average systems, and it wasn't really, I was making some money, but it wasn't very consistent. And it wasn't really until I got into Forex, I came across some mentors who taught me about price action and smart money concepts. And that was when that led me to ICT, where I came into contact with Michael. And as we know, Michael, he knows a lot about the algorithm. And that's when I first started to understand that it is an algorithm that actually controls price. And then I was mentored by Michael, and that's when it really started to click.
You've built your own system on top of what you learned from Michael. You call it trap and shift. What is it in plain English?
Yeah, that's a great question. And this is the fundamental shift in my thinking. The algorithm and the way that the market works, it needs to trap traders in the wrong direction, and then it will move in its intended direction, which is the shift. So it moves in one direction, which is to trap traders, and then it shifts. And that's where I got the name trap and shift.
And you're trading gold specifically. Why gold?
As my account size grew, gold was kind of the next stage in my trading career. So the volatility in Forex reduced significantly, and I started to trade indices, futures, and then the next stepping stone for me was gold. And I learned from Michael that you should master one specific market and then just stick with it. Michael doesn't trade gold. He doesn't even teach how to use the concepts that he has taught and apply them in the gold market. So I took what I learned from Michael and started to apply those concepts in the gold market. And ever since, I haven't looked back.
Let's actually look at the trades. 2 weeks, 10 trades, $141,000. Walk me through them. Let's start with Monday, May 4th then, your first trade of the month.
Yes, let's do that. Here we can see, here's the trap where traders are taken in the wrong direction, and then here's the shift. And so we can see that I have entered a short and I've entered another short. And then as the market's moving down and I'm in profits, I'm taking off some of those positions to lock in my profits, which is what we call partials. We take partial profits. And then as I'm getting closer to where I think the market's going, which is the previous weekly low, I've then closed out my complete position to lock in the profits and totally close the trade out. So that was Monday, 4th of May, the first Monday for the month of May.
Tuesday the 5th, same session, opposite direction. What changed?
Yeah, so it's the same model that I trade every day. And we took out the previous weekly low, and that is basically the manipulation where the market takes traders in the wrong direction. And that's the trap, trapping traders at the low of the week. Traders are shorting the market at the low of the week. And then we have the shift and the market changes direction. And this trade that I did on Tuesday was actually a live trade case study that I did live in front of my YouTube audience. So if you go back and look at my YouTube channel, there's a video there on Tuesday, 5th of May, where I executed this trade. And as I was executing my trade, I did a live screen recording. So viewers can actually go back and look at my YouTube channel, pull up the video for Tuesday, 5th of May, and you will see exactly why I've entered. And I've provided all the commentary on my reasoning for the entry and where I've positioned my profit target. And you can see live the trade executing with my entry and my profit target being hit. And you can also see the P&L. Monday's short trade was $18,000 locked in. And Tuesday's long trade was $10,000 or $9,000 locked in. And you can see that Tuesday's trade on my YouTube channel.
Wednesday into Thursday, This one you held overnight. That's unusual for you, isn't it? Why did you hold this overnight?
That's correct. My trading approach is typically to enter and exit on the same day, which is what we call intraday trading. Now, on the Wednesday, I had entered and I typically trade from the low of the day or the low of the week to the high of the previous day or the high of the previous week. Now, when I entered this particular position on the Wednesday, 6th of May, 2026, my target was to the high of the previous week. And during the day on Wednesday, the trade moved up in the right direction, but it didn't quite reach my target. And so I analyzed the market and I decided to hold that position overnight. And then the following day, on Thursday, we got to the target and I was able to close my position at the target, which was the previous weekly high. And that particular trade netted over $20,000.
Friday the 8th, back to Asia, back to a long. Tell me about this trade.
This particular Friday, which is the 8th of May 2026, was a heavy news day. And in my teachings, I suggest to traders not to engage with the market on these types of news dates because of the level of manipulation and level of uncertainty and volatility in the market. Now you can see as the market on the previous session is taking traders low, and it's basically triggering at the low of the previous day traders to enter into short positions. And that's exactly what I have referred to earlier on, where the algorithm is taking traders in the wrong direction. That's part of the manipulation to trap traders low, where I look for an entry to long the market, which is what I've done on this Friday in the Asia session. And that's what these blue arrows denote. And the red arrow here is where I've taken some partials to lock in some profits as the market has moved up. And then as you can see in the video, I've kept some of my position on because I'm expecting the market to come up into this area here on the left-hand side where we can see what we refer to as an imbalance. And you can see the market did in fact go higher into that zone.
Monday, May 11th opens the second week. You flipped bearish and stayed bearish for most of the week. What were you seeing on the higher time frame?
Well, that's the secret. The money is made by the professionals because we trade using the high time frames. So if you go and you study the chart, you will see that the market's moving from high of the week to the low of the week, and then we're back up to the high of the week. And so I'm looking for shorts. And that's what I saw. I saw a reversal where the market was first taking traders in the wrong direction, going up through the high of the previous week and then shifting direction, that trap and shift. And so I'm then expecting the market to reverse. And that's what I shorted on that Monday, 11th of May in the Asia session, back down to a liquidity pool.
Tuesday the 12th, May, you didn't trade. Talk to me about that. A lot of people watching this struggle to not trade.
Well, that's the difference between having a mechanical system and just guessing and getting into the market because you feel like the market's going to move. You can see here in my VIP community, I don't have an entry here on the left-hand side for Tuesday, the 12th of May, because there was no setup. So in my VIP community, I record all of my trades. Here you can see I've got on this day, which is the 11th of May, a video which breaks down the trade. It also shows the live trade execution with the screen recording, the charts on the entry and the exit. And I do that every day. I trade for VIP members to go and study. Now, there's nothing here for Tuesday, the 12th, and that's because there was no setup. And so if there's no setup, there's no trade. And that is the benefit of being disciplined and having a system that tells you when to enter, when to exit, and when to do nothing and stay on the sidelines.
Wednesday the 13th, back in, short again. Explain it to me so the viewers can understand the reasoning.
The reasoning is always the same, which is the strategy. The market's taking traders up high, and the market is trying to trap traders up high. And that's where I am looking for the shift. I'm looking for my signatures that tell me the market is changing direction. You can see I'm shorting here at the high, and that's a high of the day, high of the week. And I am looking to take partial profits at key levels on the way down. You can see I've taken some off so that I can lock in some profits. And then I've closed the position at a key time and at a key level, all of which I teach inside of my videos.
Thursday the 14th, you took 2 trades this day, Asia and New York, both shorts. Walk me through each one.
This is the Asia session on Thursday. You can see that I have entered shorts almost at the high of the day, and I'm simply targeting key levels, which we refer to as liquidity pools, where people are long from a previous day or a previous session. And typically people have their stops under those swing lows. And that's what I like to target. So you can see I've taken partial profits at a key level. And then there's another liquidity pool under a previous daily low or a previous session low. And in this case, it is the previous session low for New York. And you can see here, I've closed my position from where I've short from the top. And that's a very common approach where I will look for areas where the market has yet to go down to and seek liquidity, because the market only moves for one of two reasons, either to go and balance a inefficiency or to seek liquidity. And in this case, I was anticipating the market to go down and seek liquidity under that swing low, and then seek liquidity under that swing low. And that is why I entered the short and why I've taken my profits at those key levels. For the next session later in the day, which was the New York session on the same day, I also did a short. Okay, so this was the earlier short in Asia. And then in New York, I also identified a short setup. You can see I also took profits at a key low, which is again targeting a key liquidity pool. So short on the Asia session and short again on the New York session on the same day.
And Friday the 15th, another no trade day. Why didn't you trade on this day? How do you decide not to trade?
Friday 15th of May 2026, we actually had a pretty decent move down. And I will tell you in a moment why I didn't trade on that Friday. You're looking at what I post daily to my students inside the VIP community. It's known as my daily buys. And I'm going to play this video for you in a moment so you get to see what I said on the trading day for Friday the 15th of May. But essentially I've been trading every single day for the 2 weeks in May. And I was very behind in getting some lessons out, some videos out to my VIP community. And so I actually said to them that I am specifically not trading on the Friday, 15th of May, because I wanted to spend some time creating some videos for them. So that was why I didn't trade on that particular day. There were actually some nice setups. But what I will show you is exactly the bias and the levels that I gave to students prior to the open of the market on Friday, the 15th of May. So let's watch the daily bias video. Welcome back, folks. Let's take a quick look at the markets. It's Friday, 15th of May, 2026. I've just been busy trading, as you can see, and that's why I haven't been able to create a video that walks you through those setups. Now, you can see that we've just been continuously going down and seeking stops at these lows. So I think we'll continue and sweep this low now. I think that's the next liquidity pool. And that's the weekly low. So Asia should take that. Okay, so I kind of want to see us move up. Maybe we look at this bearish fair value gap, or this bearish fair value gap will back up into the low of the day here. Okay, so I want to kind of see a pullback for an entry to go short down into the weekly low. Asia could just open up and go lower without any pullback, in which case I'm not really interested. I probably won't trade today anyway. I want to catch up on some of the trade walkthrough videos. So I think the easy trade is going to be some kind of a pullback, hopefully in Asia, back up here, right, for targeting this liquidity pool. Okay, I think that's going to be the easy trade, and hopefully that's in Asia. So if I was trading today, that's what I'd be looking for, and I'd just target this low here or just to that section, that high. Okay, so I hope the video is useful. I won't be trading today, but I'll see if I can provide more guidance throughout the day. I think we'll want to see one of these. We want to see the market move up into one of these bearish fair value gaps. I would prefer the market move up into the low here as a pullback, okay, for a continuation, and our target's going to be the low of the week that you can see here on the left here. Okay, so hope the video is useful. I will start to create the breakdown videos going back all the way to the start of May, 4th of May, up until what I've traded yesterday, which is the 14th of May. Okay, look forward to talking with you in the next lesson. And you can see that this is where I was making the video. It was prior to the open, prior to the Asia session, and these were the levels I was mentioning inside the video to the students to watch for a setup. And so you can see markets coming to this bearish fair value gap, and this was the low that I had mentioned to students that we would be going down to sweep. And you can see that the market has in fact gone down and swept that low. So that was essentially the target from an entry somewhere in one of these fair value gaps. And that's exactly what the market did. It moved up, taking traders in the wrong direction, that trap, and then the shift to go down, and again, targeting a key liquidity pool. Now, on this day, it went further lower, but that's okay, right? We are simply here to take a profit from the markets. We don't really care if the market goes further in our desired direction. So long as we can take some money, we're happy. And so I didn't trade on this day because I wanted to create some videos for my students, but I did give them a bias, and that's something that I try to give them every single day so that they can identify what direction that I am trading within that day.
Monday, May 18th, straight back to it, and no losses yet. Is this normal?
No, my results are not typical. In fact, most traders lose money. Now, all of my trades for the month of May that I've done are documented here. So my students can see every single one of my trades, and I include screenshots that I've walked you through in this video. And I also include the actual videos of my screen recording as I'm doing those trades, as well as the breakdowns, which are my walkthrough videos for my students for each of the trades that I execute. You can see every single day here for May has a entry, except for the day that I don't trade. Okay, so we're talking about Monday, 18th of May. You can see that this is the screenshot. There's my entry. I've taken a short towards the high of the day. This is the Asia session. And I've closed my trade. You can see the blue arrow here at a key liquidity pool. In this case, it's the previous daily low. And I've also provided a video that I'll also play for you in this video that you can see the actual screen recording of the trade execution.
And yesterday, Tuesday, the 19th of May, the most recent one, London short, $17K. Walk me through this trade.
This is Tuesday's trade. You can see I've entered short here. This is inside the London session, and I've taken off my short. Basically, we call that covering our shorts. And you can see I've taken that off here on the left-hand side, where there is a key low, which is a key liquidity pool. That's basically the low of the previous day. Now, I've actually done something special with this specific setup. I recorded a video prior to the entry on this setup, and I explained in detail why I'm taking an entry to go short and how I am projecting the target that I am targeting, which is where I closed this trade. And just for those who have stayed to the end of this video, to all the viewers who are still with me right now, I will make available this special lesson that's already pre-recorded that talks about my entry on this trade and how I mathematically calculated the target, which is where I've closed this trade. This is all prior to the move occurring. So not only did I plan the trade, I recorded a lesson for my VIP students about what I was thinking for this trade in advance. And you can see I've taken the trade as well. And I've also recorded the screen recording of the trade execution. And I will give to anyone that is still watching this video as my way of saying thank you. And for those who have stayed to the end, this is my gift to you. And all you need to do to grab that lesson, which will be 2 videos and this chart, is to click on the link below in the description of this video. Totally free, not going to charge you anything. So there'll be a link to my newsletter and a link to go and download the lesson that talks about this specific trade and the setup, all prior to the execution and movement of this price action down to my projected level. And I'll also talk about in that video how I mathematically calculate the target here. So it is a great lesson and my way of saying thank you to those who watched and waited to the end of this video.
7 of your 10 trades were in the Asia session. 5 of your last 6 were shorts. This isn't random. There's a clear pattern in how you operate. Is that something you teach?
Absolutely, I'll teach it. It's part of my VIP community. There's a section called Classroom where there are a ton of modules. There's lessons here on how to determine the directional bias. There's lessons here on the market maker sell model, the market maker buy model. There's directions on how to read the tape, a whole ton of videos on high probability setups, how to identify reversals. And each one of these classrooms is not just 1 or 2 videos. There are a ton of lessons, and all of my trades are also recorded here. So every lesson is then reinforced by examples using real world trades, not just theory. So I definitely teach it, but it's a premium and it's available inside of the VIP community.
10 years to figure this out. Most people watching this don't have 10 years. What would you say to someone who's 3 years in and still losing?
Firstly, persistence is the key to success. If you do some research on very successful people, you will find that one of the traits that they have is they never give up. And secondly, you must know what you want. You must have a vision. What are you working towards? What are your goals? What are your dreams? Only with knowing what you want and very clearly articulating your goals to a level that you have them written down will you be able to achieve that which you want. Because if you don't know what you want, then what are you working towards? Not only that, but if you don't clearly understand your vision and your goals and your dream, then when times get tough, you will not be able to remain persistent, which is the key to success. And I'll tell you two more things. You cannot trade with money you can't afford to lose. So if you don't have a nest egg, if you don't have a buffer, a savings, then you can't trade right now. You must first save up some money, have a buffer, and only then try to use that money to invest. And secondly, which is the last thing that I'll mention, is there's two ways to success. One is a long way, through trial and error, and it's a costly activity. I've been through that process, and I pay dearly for it, not only in money, but also time. I spent over $250,000 in courses and just traveling to reach people to try and learn this stuff. And it took me 10 years of my life. And there's a faster way, which is to work with a mentor who you trust, who you know, who has proven to know his stuff. And so you have a choice. It's either the hard way or the easy way. First, if you don't have money, well, then you have to work for some time, save up some money, and change your spending behavior. And secondly, find yourself a mentor, invest in yourself.
You run a few different programs at Forex Recipes. For someone watching this who wants to learn, where should they start?
The best thing is to subscribe to the newsletter. It's $47 a month, and you get a video every week where I go through one of my trades and break it down. And that's exactly how you learn.
Last question. If someone subscribes today, what's the one thing they should be looking for in your breakdowns to get the most out of them?
One of the benefits that subscribers of the newsletter also get is access to previous editions. So not only do you get my video each week in which I break down and walk you through one of my trades, you also can go to your portal, your members portal, and watch the previous editions of the newsletters that I've sent out. And that's something that I encourage all subscribers to do, is to spend time going through the previous editions of the newsletter, because the very first newsletter that I published walks you through the trap and shift model, and then subsequent newsletter editions reinforce the model by showing you my trades that I've executed and walk you through and break down the chart, the entry, the exit, the targets, and the entry rationale. And that's exactly how you are going to learn, by watching someone who does this day in, day out, do it in front of you.
Abdul, thanks for walking us through this. $141,000 in 2 weeks, 10 trades, 0 losses. If you want to learn from Abdul, the link is below.